A lot of declines there. Apple, kind of the only one that's even close to flat. Why has Apple been spared from this tech wreck?
Well, Apple had a surprisingly strong quarter. A lot of people thought that Apple was going to slow down both top line and bottom line, and really was a breath of fresh air last quarter. And of course, I imagine going forward that they're going to be impacted by the same geopolitical events as everybody else, but they are a relative shelter in the storm. So I'm still a better buyer of Apple.
So you also have some stock picks. I want to get to them. Speaking of geopolitical events, some of your stock picks are Palo Alto and Datadog, cyber and cloud stocks, obviously really in the spotlight, especially after that Google deal yesterday to acquire Mandiant. But you also have a number of chip makers on your list. You're saying you wouldn't buy them right now unless somebody wants to buy. And if you do buy, it's a long-term hold. I want to talk about those chip makers. How do you see them being impacted just by commodities that come out of the Russia-Ukraine area? We're talking about neon, nickel, palladium, and platinum.
So if you put the fear of God in any of their customers, that's going to slow down their end markets. And then they're still being impacted by the supply chain crunch. You wouldn't think a semiconductor company, which you would think is one of the leaders of the supply chain crunch, would be impacted, but they all are impacted one way or another. Like a good example is Micron, which is one of my favorite picks, MU, and they make memory chips, but their memory chips go into modules with non-memory chips. And the problem is their customers and Micron can't get the necessary non-memory chips to supplement their products, and so they can't ship as much as they'd like. And so, yes, even these companies are impacted by supply chain malfunction.
So right now we're looking at, the Russia-Ukraine war, obviously a very serious situation, the most important thing, the loss of life. But clearly it's impacting the market. But we've kind of turned a blind eye to the other thing that impacts a lot of these tech companies and high-growth stocks, rising interest rates. The 10-year yield right now at 1.9%, not historically high, but certainly high for recent years.
Yeah, I'm hoping that that's all baked into the stock prices. We'll get our next read from the Federal Reserve Board only a week from today on March 16th. But you must admit that if inflation is rising, and inflation has a big component of energy, and the energy situation has only got worse with the potential cutoff of energy supply from Russia, that, yeah, inflation could get worse. Yeah, the Fed would have to raise rates more quickly and more steeply in response. And yeah, that would continue to ding tech stocks.
Yeah, I mean, a lot of these high growth stocks obviously hit by rising interest rate pressure. I want to circle back to what you call good declines. You're going to have to describe or explain that to a lot of people, because obviously people really bought into tech during the pandemic, and now they're seeing these big declines. Why are these good declines as opposed to bad declines?
So I think it's going to set up a great opportunity off the bottom, and I'm not committing too much capital today because I can't call the bottom when Putin is in charge of the bottom. But we will have some opportunities. Now, it won't be everybody, because some of these tech stocks, frankly, got really expensive, and they were actually driven by goodies provided by COVID. Like a lot of them benefited from the remote work theme. And of course, that'll go away as the Omicron or whatever variant follows it subsides. But there are some names that have been absolutely beaten that are high quality. And will they come back to their egregious prices prior to the pandemic? Probably not. But man, that doesn't mean that they can't bounce 100% off their bottoms. Well,
speaking of the bottom, right now we're seeing the NASDAQ up just about 2% right now in the pre-market. Did we already see the bottom, or do you think there's somewhere lower that we could actually go?
Boy, Frank, I'd love to make that call, but I don't have any confidence. I hope so, but I don't have any confidence in the call. So if I even see the market rally today and then rally in ensuing days, I still am not a believer until A, we get through what the Fed has to say on March 16th. We only have to wait 7 days for that. And B, I don't need to see a resolution of the conflict on the Western Front, but I need to have a little bit more confidence about the wind down.